Hi guys, this is Hector. In this video I want to talk about the reasons as of why I don't trade the second half of Fridays, okay? So why I don't trade past noon Euro time, okay? I'm gonna illustrate this example showing you a live chart, something that I've noticed right now in the market, and I thought it was the perfect chance to illustrate my point about not trading Friday afternoons, okay? We are now looking at the live chart on GBP USD in the 1 hour time frame, okay? It is right now 4:15 p.m. Euro time. Basically, London session is about to close in 1 hour and a half. And look at the live bar right now. It's just if you saw this in real time, okay? If have a look at the 15 minutes bar. Have a look. You see this bar right there? It's just jumped 40 pips within 15 minutes. Actually, let's go to the 5-minute chart. There it is. All right. Do you see this spike right there? Okay, that's an almost 40 pip spike, and price seems to be pushing up. All right. I'm going to explain you the reason as of why this sometimes happens in the second half of London session, okay? On Fridays. This is only related to Fridays afternoon. Have a look. This is today's price action, okay? This is yesterday's, Thursday price action, Wednesday, Tuesday, and Monday. Well, Monday's down there. Anyway, it's been a clear downtrend this week, alright? We've moved from 198.65 down to 197, alright? It's been a almost 200 pips fall, 165, 70 pips fall this week, okay, in the last 3 days. This phenomenon happens when we see a rather one-directional move throughout the week, okay, a rather clear trend, okay, throughout the week. This happens because the large players, large market players such as hedge fund managers, institutional traders, people who trade for banks, okay, people who enter the market with hundreds of lots per trade, okay, even thousands of lots per trade. Basically, the people who move the market, okay. They've been cashing money out of this market, okay. They've been making pips all the way along. Imagine you were short somewhere here or here or here, okay. You've run a beautiful 100 and something pips in the last few days, okay. And it's weekend. The weekend is about to come, okay. And you have an open short position on the sterling pound, all right. You have two options. Either you keep the trade open for over the weekend, okay, and that's always risky. You never know what's going to happen over the weekend, and you don't have any reaction capacity since the markets are closed, okay. So you've got two options. Either you let the trade run over the weekend, okay, with all the risks that it actually implies, or you close it out. You close it out at the end of your shift. All right. There are thousands of London-based traders who move millions, billions of dollars, and many of them have been making money being short of this market. It's now afternoon London time. They are about to leave the office. They are about to call it quits for the week, okay. And what are they gonna do? Of course, they're gonna close their positions, okay. If any of those massive positions are closed, okay, prior to the weekend, you see this kind of stuff. Okay, you see a 50 pip move bar within 15 minutes, and you don't know why. This can actually trigger your stop losses very quickly. Okay, let's assume that you see this downtrend, okay? You're saying, all right, this is a beautiful downtrend, I'm gonna short this market. You zoom into the shorter time frame, your system gives you a signal, you take it short, and then bang, okay, a 50 or 40 pip bar knocks you out, triggers your stop loss, and you don't really know what happened. I mean, it's why have we had such a massive move? There is no fundamental news announcements coming out at this precise time. Why has price? Let's go back to the 15 minutes time. Why has price spiked like this? Okay, you see that massive green bar? Why has this happened? Why has my stop loss been triggered up there? Well, that's because one of the big guys is perhaps closing his trade, okay, and they can move the market. Their trading size is just so massive. Then when they take profits out of the table, the price they actually impact the market, okay, by their decisions. All right, so and when they take their when does this profit taking phenomenon happen? Well, it happens at the end of their shift, okay, before closing the shop for the weekend, and that's the second half of London session. All right, you've got to remember that the biggest traders in the world are based in London, okay, as far as forex goes, of course. London is the most active market, okay, larger than the United States and larger than Tokyo. And at the end of the London shift, okay, thousands of traders with an enormous capacity to move the market. You know, they exit their position, especially if they've been in profit throughout a trendy week, just as this one. Have a look at this. Thrust down, consolidation, thrust down, consolidation, thrust down, okay? Many people have made loads of pips in here. And well, you know, it's afternoon Friday. They are closing the shop. They close their positions, and this is reflected on the chart by massive spikes like this. Okay, a 40 pips spike within 15 minutes. Just like if there had been any fundamental release on the market. That's why I never ever tried take a trade after noon London session. Okay, once you hit the midday hour on Friday, okay, that's London session, London time. All right. I close for the week my trades. Okay. Not that I close my trades, but at least I just don't enter anymore in that market, okay? And I definitely like to move my stop to break even at this time, okay? If prices moved a little bit on my favor, I do like to move it to break even just to avoid this kind of stuff, okay? I don't want to eat any drawdown because any of the massive players have just closed their positions, okay? I don't want to be vulnerable to their trading activities, okay? So please minimize your risks, guys. Be aware of this fact, okay? Trading after London noon on Fridays is extremely risky. These spikes do happen very often, okay? It doesn't happen every Friday, okay? But just zoom back in the charts, okay, and analyze what happened in the major currency crosses on Friday afternoon, okay, about 4-5 p.m. All right. You can see this phenomenon happens many times. It just does happen, okay? It does happen, and now you know why, okay? So try to minimize your risk, okay? Call it a day. Do not trade Friday afternoons, London time, all right? Do not trade the second half of London market, and do not trade at all the US market, okay? You have either two options. there are two possibilities to happen on Fridays afternoon and evening markets. Okay, either you see this kind of shit, okay, which is always very dangerous because it can easily trigger your stop loss, or if this doesn't happen, if the big guys don't close their positions, if no chaotic spike occurs, okay, like in this one, what you're gonna see is price sideline for most of the rest of the day. Okay, you've got two options. Either there are two possibilities to happen on Friday afternoons or evenings in the market. Either one, okay, these massive spikes. Second, if the spike doesn't happen, you're gonna see a range bound, boring, non-profit given market at all. Okay, why is that? Because no one is crazy enough to enter the market just few hours before the market closes for the week. Okay, no one does it, so market falls into a range bound market condition. Okay, it just moves sideways for the rest of the day. You are not gonna see any swinging, nicely smooth price action. Okay, either you're gonna see this, all right, the massive spike bar, or you're gonna see price moving sideways for the rest of the day. In either case, you just don't want to trade that kind of market formations. Okay, both of them are dangerous. One, because you can easily get knocked out of the market. Okay, and the second one, because there is no money to make here. Okay, and the markets are gonna close on you. Okay, on Friday evening, and basically your trade is gonna be at best at entry level, and you're gonna be exposed to the weekend events, whatever event might happen in the market. You have no control whatsoever, and you have squeezed no profit whatsoever out of it. So no matter what a scenario plays out during a Friday afternoon or evening markets, both of them are bad. Okay, both of them are pretty negative. So just avoid trading on Fridays post London noon. All right. Okay, guys, I think I made my point very clear. I cannot make it any more clear than that. Look at this stuff just rocketing up. Okay, it's just crazy. I wouldn't be surprised if it goes all the way up here for a 50 pip move within half an hour. It's just insane. I mean, many people, many non-educated traders, okay, intraday traders, that they just don't know better, and they've entered short in the direction of the trend. So many of them have lost money here. So many of them have gotten their stop losses triggered, and they don't know why. Okay, now you know better, guys. Please make yourselves a favor. Stay out of the markets. Okay, on Friday afternoons and evenings. Okay, be very cautious when it comes to trading at this time. All right. Okay, that was all. Bye bye. Hi guys, just a quick update to this video. It's been recorded 1 hour and a half after the previous one, just for you to see, okay, how far the post noon Friday move has stretched out. All right, from 199.10 to 197.10 to 197.80. That's 70 pips, okay, within an hour and a half, in the direction opposite of the main trend. Okay, once again, guys, please be very careful trading the second half of Friday. You see what happens. Many people have been stopped out of the market in this spike. Okay, this spike took place within 2 hours time frame. Okay,